Currency wars in 2025, reality or myth? Currency wars, where countries deliberately devalue their currencies to gain trade advantages, have been a recurring concern in global economics. As we approach 2025, it's important to assess whether currency wars are still a tangible threat or just a myth. The reality of currency wars in 2025. In 2025, currency wars remain a real possibility, driven by various economic factors. Countries like the US, China, and the EU continue to influence their currencies through policies like interest rate manipulation and quantitative easing. Economic recovery post-pandemic may lead nations to use currency devaluation as a tool to boost exports and reduce domestic debt burdens. Another factor is the rise of central bank digital currencies, CBDCs. As digital currencies become more prevalent, nations may engage in competitive devaluation, trying to manipulate exchange rates in ways traditional currencies cannot. With the growing adoption of CBDCs, countries may take actions to protect their financial interests and maintain competitiveness in the global market. The myth of currency wars in 2025. However, there are several reasons why currency wars may be less prevalent in 2025. One significant factor is global economic interdependence. The world's interconnected markets require stable exchange rates to facilitate trade. A major currency war could disrupt the global supply chain, leading to negative outcomes for all parties involved. International institutions such as the International Monetary Fund, IMF, and the World Trade Organization, WTO, also play a role in preventing currency manipulation. These organizations have mechanisms to mediate disputes and prevent outright devaluation strategies that could lead to a full-scale currency war. Furthermore, countries are becoming increasingly cautious about the risks of currency devaluation, including inflation, capital flight, and strained diplomatic relations. The negative consequences of such actions have led to a more balanced approach to currency management, reducing the likelihood of widespread currency wars. Conclusion: currency wars in 2025 are both a possibility and a myth. While economic pressures may tempt some countries to manipulate their currencies, the global emphasis on cooperation, economic stability, and international regulations makes a full-scale currency war less likely. Therefore, while risks remain, the scope and frequency of currency wars are expected to be limited.